All right, guys, today is Saturday, April 12th. Now, I usually make my videos on Sundays, but tomorrow I'm not going to be available, so just going to do it today. I mean, what can you say about last week? Last week was pretty epic. I mean, just crazy moves from in the stock market and also on the FX pairs. I don't know about the other pairs, but only the pairs that I trade were having some substantial moves, which is the Euro USD, pound dollar, and dollar yen. So we're going to start off on the Euro USD, and right off the bat, you can see just how wild these moves were. Like if you compare the candles from previous, I mean, these candles over here, it's just huge. The last 2 days, Thursday and Friday, um, that's almost a 5% move, dude. In 2 days, that's pretty epic, right? And the funny thing was, a couple of weeks ago, I thought that these moves were pretty substantial, right? You had this strong green bar, this one. I was like, wow, man, this market's showing a lot of strength until more of the tariff talk came out, and then we had this huge move down. We had this, pretty much gave up some gains and then gap down. And then we had a huge move to the upside. So where we left off, I think on Sunday last week, I was talking about to see if we were going to hold this resistance area, and we gapped down pretty substantially. I wasn't sure about my positions, but so far so good. I think my average long position is 1.08. I'm sorry, 1.0980 is where my long position is right now, and so far so good. So I'm definitely liking this volatility and the move to the upside. So once I saw that we tried to recover, because it did try to recover on Monday, we had this long wick to the upside, and then nothing major on Tuesday, and then on Wednesday it was pretty interesting because we had this again another huge run up towards 1.11, and then gave it all back towards the end of the day, and I'm not sure if this was when the stock market rallied like massively, which we'll get into just in a second, but gave up all these gains right over here and ended up red. Now, I was thinking to myself, well, I prefer to see a green candle close, but we were still holding above the one of the pivot support levels, or one of the pivot levels, I should say. So if I put that on here, you can see right over here. I think it was R1 or resistance one. The market came down and it closed red, but it still stayed above that level there, which kind of gave me the courage to kind of stay on the long side. And then, well, good thing I did, because the next day we had a massive move. I don't know, this is over 2% in one day, and then followed up on Friday by another huge move that was almost 2%. So, this is a huge move right now. So I'm not surprised that we got that these moves to the upside, because we usually get we usually get a lot of volatility when some kind of crisis is going on, or something like, for example, the tariffs are going on, and we get these crazy moves, and it's good for us traders, right? Because we want to make profits as quickly as we can. But looking at the technical side, on the monthly chart, I was talking about. Let me just get rid of this here. Let me hide it. I've been talking about this falling wedge for a while, and finally we broke out of it. We broke out of it hard. So I was expecting, a move to the upside, but not as aggressively as we did. But whatever, the market's going to do whatever it's going to do, and we finally got that breakout to the upside. Another thing I was looking at that I was mentioning last week was the broadening bottom pattern, or right angled broadening pattern. There's a certain name for it. But I was talking about, if you go back to the last video that I made, I was talking about where there's a resistance, there's a consistent resistance area while the price is making lower lows, and then it shoots up aggressively, which is exactly what we got. Now, it's kind of confusing, here, because technically it's not a textbook resistance. We got over a little bit here, but again, patterns are not going to be textbook all the time. You have to adjust and see how this market reacting. But you can also look at it another way here and say there's a resistance here, and you can draw it here where there's like two trend lines diverging away from each other. I forgot what this pattern is called, but it is a pattern. Either way, we still broke above it. So to me, this is very bullish, but we'll have to see what we get this week. Are we going to get a pullback, or are we going to get some kind of continued strength? That remains to be seen. But if we take a look at the daily, you can see it's like really extended to the upside after this wick. I wouldn't be surprised if we get a pullback. Where we would have pulled back, I would be looking at 1.12 due to this level of support here. So if I take the support level right over here and connect it to this resistance area, you can see we already got some resistance here, pulled back, and then shot over it. So if we pull back somewhere here, I'm not going to look to add any more positions. I feel good about what I have now, and I pretty much moved my stop loss to break even. If it starts trading below 1.11, then I think I'm just going to take profit, right? Because it doesn't make sense to just give up all these gains and then just let the market just take you out. But I don't think that's going to happen. I think we're either going to continue with some more strength, or we're going to pull back to around 1.12 and before we start heading higher. 1.2 is my target. I know it's looks pretty far away, but considering the volatility that we've been having, I wouldn't be surprised if we if we did end up there, it wouldn't take too long to play out. But let's go to the 3-month chart, or otherwise known as the quarterly chart, and you can see that we finally broke out of this falling wedge pattern, and 1.2 is where the 10-year pivot is located. It's listed here as 1.217. So we did hit what I call intermediate levels at 1.14, and we pulled back from there. But if we continue higher above that, then I'm going to look for this market to continue higher and hit that 1.2 area, which is the ideal area that I'm looking to take profit and get out of this trade. So that's pretty much it for the Euro USD. I'm still expecting a bullish move overall. Might get some pullback next week, but I'm still expecting my target of 1.2 to play out of this falling wedge. Let's take a look at the pound dollar. Pound dollar was interesting to me because last time, or the last video that I made, I was talking about this support area here, and I said if we want to see if the market finds some support around this area, but we gapped down pretty substantial, but we moved up to find resistance here. All right, let me put this thicker trend line here. So found support here, market gaps down, finds it as resistance, but then takes it right back up. And kind of have like a broadening top pattern where the trend line is angled to the upside, but you have a horizontal support level and vice versa. Usually the market breaks out in the opposite direction of the slanted trend line. So in this case, since we had this gap here, and the market overall, the US dollar has been getting killed, I'm not surprised that we made a substantial move back up, and I'm expecting for this market to continue higher, as high as say 1.4. Now it looks really far away, but if I look if you look at the monthly, again, we're out of this huge falling wedge pattern. And if I zoom in, you can see we broke out of it back in last year, June of 2024. And then towards the end of the year, we started pulling back, found some support here. Now it's starting to try to make its way up here. So if I look at a 3-month chart, kind of similar. I actually like the wedge pattern on the pound dollar. It just looks cleaner to me instead of the Euro USD, but nonetheless, they're still falling wedge patterns and they're bullish. But I like the way the pound dollar wedge looks over the Euro USD. But I like to trade in the Euro USD. I prefer to trade that, so that's why I'm long on that one, and not looking to get involved in the pound dollar. But it's interesting how they both have the same on the long term time frame. They both have the same pattern. And I expect us to jump to 1.4 overall. Could go higher, but that's what I'm looking for on the pound dollar. So let's move on to the dollar yen. Dollar yen was interesting, and last week where it came off, I said, all right, I thought we were going to make a move maybe to like 152, but then we had this huge move to the downside, and that's when I zoomed out and said, what's going on here? Well, how come this market is just tanking hard, other than obviously the dollar has been getting hit pretty hard. But if we take let's take this trend line here, and let's just clean it up. Okay, support here. A lot of volatility and a battle between longs and shorts here. Up, down, up, down, up, down, and finally broke to the downside. So I was thinking to myself, well, if we're going to continue to the downside or if we're going to pull back, this might be area of resistance, and then that might be a good opportunity to go short. But I went short. Don't remember my price. I think 140. 143.30 I think was my price. If we move back up a little bit, that's fine, as long as we stay below 146. I'm expecting 133, and which looks pretty far away. But if we zoom back out, let's say to the weekly chart, you know how I love these broadening patterns. So the gets really wedged out over here, and it starts expanding further out, and finally breaks out of this lower trend line. Now, we have this little gap here, so I wouldn't be too surprised if the market tries to go back up and cover that gap. But usually, when we start breaking out of these broadening patterns, it gets very aggressive to the downside. And from the start of the pattern to the top of the pattern, have about 50% of the move. So I'm looking to maybe get around, I'm looking for 133, ideally. Would be my 133 even would be my level to try to get out of here. Now I put the pivot points on. These are 10-year pivots. We have, we found some resistance around that resistance. I believe this is resistance 2. Then found some support at that median level, and now I think we're going to break lower to the next area, which is around 136.75, somewhere around this area here. But I'm expecting this zone right over here to get hit, which is, it says here 131.13, and then the 50% says 132.199, but 133 even is where I would like to get out of this, and you just call it a day. But yeah, I'm looking for this to start getting continued selling strength to the downside, and for the dollar to just keep getting hammered. And just wait to see. Just have to wait and see what this market's going to do this coming week. I wouldn't be surprised for a pullback, but yeah, I'm looking for this to start getting aggressive to the downside. So that's pretty much it for the FX pairs. I'm bullish Euro USD, I'm bullish pound dollar, and I'm bearish dollar yen. Now, if we move over to, the TMF was one I was looking at for, this is, treasury bonds. Okay, so I figured that this market might continue to the upside. But once I saw this, I zoomed out a little bit more on the monthly, And I said, okay, this broadening pattern doesn't look like it's ready yet. And if we start breaking out to the downside, which it looks like we might do with the descending triangle, usually when these break out to the downside, they break out pretty hard. So we haven't broken, to me, we haven't broken down yet, but I'm expecting another move to the downside. So if we pull our pivots, our 10-year pivots, there's another level down here around $25. So if we start moving to the downside, I expect a lot more bearish price action to get down to this level here. And with that, I'm looking, I'm long right now TMV, which is 20-year Treasury bear. And yeah, this looks bullish to me. This broadening pattern here looks like it's ready to go to make a move to the upside. And the interesting thing here is, and we have this resistance. I don't know what to call this pattern. I don't even think it's a pattern. I think that it's just a way, I guess you could say, like trade intuition. I mean, I've been looking at these formations play out, for so many years, over 10 years now. And I guess you can say it's inverse head and shoulders, but the shoulder's not so deep, So if we look here, I would expect for this to be a little deeper and move up, maybe the head here and move up, and then a little more depth, and then a breakout to the upside. But what I have found, usually this is what happens with these patterns. And I remember there was a pattern like this on the US dollar many years ago. And people were calling this for to be bearish, but it was the complete opposite. So just a little education here. Usually when you have either a horizontal or a slightly slanted lower trend line, right? You would think that it's bearish. Now the price, what usually happens here is that price starts hitting this area of resistance, makes a dip to the downside, comes back up, but doesn't break resistance. So it stays around here. And sometimes people go short here. You have traders going short, looking for another dip to the downside. But that doesn't happen. It just stays here consolidating until finally it makes that big breakout, either continues higher or it pulls back and then it goes higher, right? So that's essentially what I'm looking for here. And this one looks good, right? You have some consolidation here, a big move to the downside, and then you have, again, some consolidation here, which I believe that eventually will make a move to the upside and break out. I'm looking for maybe 56, maybe as high as 70. Not looking for anything crazy on this trade, but I think that this is bullish, which bonds should continue to sell off. So that's an interesting one. This probably is going to take a little while since it's on a monthly, but I expect this to break out to the upside. But we shall see how that plays out. Take one more look at something else here. SPX, man. Look, if I go on you can even go on the daily. Well, the daily looks a little sloppy. Let's go to the weekly. I mean, take a look at this candle. Massive candle to the upside, right? And it's in response to this huge, bear candle that we had the week prior because, the sell-off got so aggressive. But this is like, you're talking about almost 8 weeks of moves to the upside in one day. And that was pretty substantial. Obviously, Trump came out saying that I think it was going to put a 90-day pause on tariffs. He still had tariffs on China, but the fact that he tweeted out that it was a good time to buy is a little sus, if you know what I mean. But either way, we had a nice, recovery here. But when I look back, when I zoom out, I still, I'm still bearish on this for now, right? Because we still, all markets, no matter what it is, even if you have, if you have a bear market, you're going to have huge rallies. If you have a bull market, you're going to have bearish runs. So we'll have to wait and see if this still gets aggressive and starts moving much higher, or we get some of the continued selling, going into next week, right? There's not that much economic data coming out next week, other than I believe on Wednesday when Fed Chair Powell is set to speak. Who knows what he's going to say, but that might increase some volatility here. Like if I look at if I zoom out and I look at like TQQQ is one I love to trade. Out of the broadening pattern, it made that nice huge move. Now, remember, I was just showing you an example on the dollar yen on how that broadening pattern just takes off once it starts breaking. So this looks about 50% or so, around the 50% mark where it started bouncing up. So if I take a Fibonacci all the way down to the very top, let's use our 50% median level. Oh, actually, no, further down to 50%. This looks like, let's see, let's put on another marker here. Say all Fibonacci ratios. So it came down around 69%. So if I use what I call 369 Tesla numbers, you can see it right around this area has found some support, right? So, but we're not out of the woods yet, because if I remove this, we broke out of this broadening pattern already, right? So technically, this pattern is one and done. It's already played out. If I move on to the monthly, you can see a much larger broadening pattern here. So, if this holds true, there's so much more selling, ahead of us. What the market's going to do going forward. But this could get really ugly if it starts playing out. You can see TQQQ trading at $17, $20. That'd be great to potentially get positioned for another run, a bull run. Make a lot of money that way. But yeah, this still doesn't look good to me. We still have red candles here, and we still have red candle still for this month on the monthly. So still doesn't look good. SOXL is another popular one. You can see that out of the broadening pattern, got really aggressive. We found some support around this previous support area, but still, this thing can, believe it or not, can still trade down to sub $7. So yeah, that's one to watch. I'm definitely watching TQQQ and SOXL, because if prices start trading down here, then those might be some juicy buys for another move to the upside. Maybe even some good call options on those. So that's pretty much going to be it. Again, we have to wait and see what's going to happen with the Euro USD. And like I said, I'm still bullish on this one. I wouldn't be surprised if we do get a pullback, but I also wouldn't be surprised if the buying still continues aggressively, right? You might have some people that are like holding short from down here or holding short from here, hoping for a turnaround. And in those instances, the market sometimes has no mercy, and it just continues going on and on and on and on. It's just, when is it going to stop until, you start hitting margin calls. So, so that's something to watch for, but we'll be keeping an eye on the Euro USD. Don't have any major news coming up. I mean, I'm looking at Bloomberg here. I know it's the weekend, but it's the only one that we have here, talking about the stock market. And I mean, the latest news here, you have like Apple and Nvidia getting relief from the U.S. tariff exemptions. So we'll have to keep an eye on that, see what's going to happen. That might fuel the stock market to bump up and make another attempt, another strong rally. But sometimes the market's a little, irrational. Good news could send the stock market to the downside for some reason. So that's why I feel that looking at the charts is very important, and it's very important to get a grip on good technical analysis, so that way you can kind of like maneuver your way into the market. And sometimes the news might be a little bit too much noise, and this gives you a clear picture of what's going on. All right, so with that said, I hope you enjoyed this video. Again, like I said, this Saturday, I usually do my videos on Sunday, but I will be busy tomorrow, so I'm doing the video now, and we'll have to see going forward, see what surprises this market gives us for the upcoming week. All right. So as always, good luck and trade safe. I will see you in the next video.